Hurricane Beryl slammed Houston, and I know you're wondering, how's the real estate market holding up? Spoiler, it's not that pretty. I'm RK with the Community Warriors. Now we've sold hundreds of houses here in Houston. I've spent nearly 30 years of my life here, and we've seen what happens with real estate after all of these damaging events happen. Things like Hurricane Harvey or the winter freeze. As you all know, Hurricane Beryl came to this city, wiped out pretty much everyone's power, and left us with millions of dollars in damages to our houses and other real estate, myself included. We're gonna answer a couple of questions in this video. Are people still moving in and around Houston? Did the home prices tumble after all of this happened? What actually happens to housing when a city gets obliterated exactly like this did? And what should we expect and plan for when it comes to real estate in these next couple of months? First, I wanted to share a story. There's this video that surfaced and kind of went viral about all the flooding in Houston. It's pretty crazy because someone had showed me this video and it popped up and I was like, wait, I know exactly where that is. Literally right down the street from my house. So you can see that here. There's been a lot of damages just from Beryl alone. Luckily for us, our house sits pretty high up, so the house itself didn't get that much damage. But we did have to replace the roof on one of our houses and a lot of the siding on it. We have clients that are still dealing with repairs on their house and things on hold when it comes to their moving plans. Let's take a look at this article here just to highlight a little bit about what actually happened. So right over here, it mentions that Beryl knocked out 2.3 million CenterPoint customers. That's 81% of its entire customer base. It's tons of people. In there, on top of that, there was 20,000 utility poles that were knocked down during the storm. So tons of damage from that. They restored power to half the residents in about 48 hours. So realistically, most of us were without power for longer than 2 days. And keep in mind, this was in July, and if you're not from Houston, July in Houston is crazy hot. It's hot, humid. It was in its 90s, so it really was not a good time to not have any power. And when it comes to real estate, this is gonna highlight how much this actually hurt us to not have power for a couple of days, not be at work for a couple of days, and really just be in a very uncomfortable spot. Before I actually dive into the numbers, just to share a little perspective about how things went for myself and my clients during this time over the past month. It's been pretty crazy, right? So we were dealing without power, we were dealing with having to go back and forth with insurance, not having a lot of contractors available to do a lot of work. It was tough because we were balancing personal life, we were balancing our investments, and we were balancing a lot of the deals that our clients were struggling in. A lot of our closings during this time, like from July all the way up until even now, have been pushed back a lot. Not just because we were out of power, but pushed back because we had to get houses repaired, we had to get additional insurance quotes because insurance is higher. So across the board, it just trickled down into making things slow and really disrupting our market. And that's the headline right here in the most recent Houston market update, is that Hurricane Beryl disrupts Houston housing market in July. Looking at this chart right here, there are a few pretty scary indicators here. The first one that we wanted to highlight is, you can see here, the total active listings is up from this same time last year. July is usually a market that moves very quickly. Obviously, summer, a lot of people move during the summer. But you could see here, there was a 30% increase. Over 11,000 extra homes were sitting on the market in July. Because of what I mentioned, a lot of houses sat because of damage. A lot of people are not out looking when they're trying to just stay cool and figure out what to do with their families. On top of that, you can see the total property sales over here actually also went down about 2.1%. So kind of echoing what I'm mentioning about the active listing. Just less people out there really worried about moving. And this is the really scary thing. Even though there's more houses on the market, even though there are less sales, what I noticed in here is that the average sales and the median sales prices still went up from this same exact time last year. You can see here, 425 average, upping 445 and 340 median going up to 350 median. So we're seeing an increase in price despite all of these factors pointing to prices going down, or at least it should be going down when you see this type of data. It's really baffling to me. You see the months of inventory going up from 3% last year to 4.3%. So what you typically call a buyer's market or a seller's market, it looks like we're leaning more towards a buyer's market, yet the prices are going up. So this is the thing that is really confusing, and it's a little scary because we already lost May due to the derecho storm to a lot of sales. Then we ended up losing a lot of July and a lot of August because of damages from Beryl, and prices are still climbing up. So it's just interesting to see where our market might move to. A lot of people are putting things on pause because we are heading into September now and people are back to school. A lot less people out there looking. It looks like it might just be downhill from here. But to be honest with you, it felt very similar to a market that we had already experienced before in the past, and that was Harvey. If you don't know what Harvey is, it is one of the most damaging events in Houston's history, causing quite a few homes to flood and really affecting our market over a couple of months span. I was a young realtor at the time, and this was around August, so a little bit later in the year, and it honestly felt like the world was ending. I mean, we had family members, as you could see, just houses flooded. We were taking all of the flooded and waterlogged belongings of clients, friends, families, like everything really did stop after Harvey for us. I really didn't think that things were gonna bounce back. I've never experienced anything like Harvey when it came to how much it really affected the real estate market. So I decided to do just a little bit of digging to see if we can find some answers to our issue right now relating to Beryl, because I believe that history leaves clues for what the future has to offer. And luckily we came across this study, this exact study right here, and it blew my mind. And this study came from Texas A&M's Real Estate Research Center. And it was actually before Beryl, but they were doing a study based on the market right after Harvey. I have 4 points in here that really opened my mind about what to expect with the real estate market here in Houston after the disaster that is Beryl. So coming down here, one of the main points that we found is that record level rainfall impacted more than 200,000 Houston homes and caused 125 billion in direct damage. Not even close to the damage that was estimated from Beryl. Beryl was estimated around 2.5 to 5 billion, where this is 125 billion in damages. This is going to be at the most extreme what happens with the housing market in the most extreme situations. It says right here, housing sales actually normalized within a few months. Digging into the deeper details, I wanted to take a look at the migration data right here. And you'll see here in this data that households exposed to 10,000 of flood damage were much more likely to move out of their pre-Harvey residence within 6 months of the storm compared with their non-flooded neighbors. So it's interesting to see that because of the flood, it actually generated a bit more sales, or a likelier amount of sales. So there was an increase of within county move during this time, 2 years after Harvey, so 2017, 18, 19, after all this damage. A lot of people moved, but didn't move out of the city. It's interesting because at the time it felt like everyone that was affected was done. They were like, I'm done with Houston, I'm out of here, I'm moving to a different city, this place sucks, insurance sucks, it's gonna flood. And it just felt like everyone was gonna be out and we were gonna tank in value. But what you'll see here that a lot of people move, but just in a different part of Houston over the next 2 years. So right now I have a lot of people talking, and it might be a loud minority, or it just might be a fed up group of people that are a bit more vocal, saying that they're done with Houston, this is the last straw, I'm gonna move out. But the reality of it is that an event like Harvey, which was much more damaging to a lot of people, a lot more people than something like Beryl. Not to downplay Beryl, people still ended up staying in Houston, just kind of finding other options or other areas to mitigate their risk of damage, which I guess we can talk about in a little bit. But this was a really big point that surprised me a lot, to be honest with you. I thought a lot of people at the time were coming in from out of the city or out of the state, just moving in, and Houstonians were like sticking them with their problem because they weren't aware of it. Reality, a lot of us stayed. And this right here puts a lot of things in perspective, and this is the impact on home ownership after Harvey. So right here, it says that there is a substantial transition into renter occupancy for those who end up selling their house after suffering property damage. With that, essentially it's just saying a lot of people ended up choosing to rent after all the damages from Harvey. And there are a lot of people here in Houston that had a lot of the roof taken up, a lot of the siding, windows, water damage, trees into their homes. And this may be something that they're having to look at as well. At the time, just a lot of people were not really thinking in the short term to buy another house. I mean, they had a lot of their lives and their equity just taken from them at the time. And the gut reaction is just to remove the liability from yourself and transition into a renter. So that may be a little bit of what we're possibly going to see in the future. Right over here, you'll also see that those Harvey-related damages prevented roughly 1,100 sales through 2019. And that's about 300 million in lost dollar volume to the real estate market as a whole. Now, again, we didn't have the exact same damages that we did during Harvey, but we certainly had quite a few damages that will affect a lot of people's decisions. Now, it may not be $300 million lost from the housing market, but we are going to see some effects over these past couple of months from people that have had damages to their homes, from people that have had losses to their wages because they weren't able to work, etc. And scrolling on down to my last point that really gave me the insight of what the hell is going to happen these next couple of months is right over here. Where do impacted homeowners go? Where do they move to after all this happens? Now, it said that Houston households impacted by flooding tended to move to higher valued homes and higher income neighborhoods, which is a little crazy to think about because we just saw the last point, which was a lot of Houston homeowners also moved down into rentals because they were struggling. So the data is really showing two stories at this. And this is a classic issue of the rich staying rich and the poor staying poor. When disaster happens and people are forced out of their homes and their neighborhoods, it accelerates something that was already going to happen. So the people that were in kind of the middle range, maybe living below their means, end up taking advantage of an opportunity to get into the wealthier neighborhood that they've wanted. And the people that were in that area and kind of struggling or a little bit around their means, having to take a step down into either lower homes or not even owning a home in general. So it's a story of the extremes, and it's really why our real estate market is just so wonky. Calling back to where we're at with the market updates, you see that we're down on sales, we're up on inventory, pricing should go down, but it's not, it's going up. And the reality is that people that can buy houses are buying more expensive houses, and the people that can't buy houses are just not buying houses at all. And this is highlighted by this right here. Now, we're gonna break it up into the housing segment, and you will see here exactly what I mean. Harvey was the most extreme case, and we're seeing something very similar here, where house sales performed in every different price bracket. You'll see here that the houses from 500 to million increased by 9.1%. And I will be honest with you, most of the people that we worked with over this past month and a half have been within this price range, 500 to a million and a million and up. For a lot of people, it did feel like an opportunity to take advantage of, where you were able to get a bit better of a deal because things were on pause. Life was easier to manage. A lot of our clients had family with homes that had power. A lot of our clients' work wasn't as affected due to being able to have the means to have electricity, Wi-Fi, food for their family, to go to a hotel. But when you go down to the houses that are 500 and under, we personally had a lot of our clients have to pump the brakes, and with good reason. A lot of people weren't able to get to work for a week. A lot of people had major damages to their houses that it was the last priority. If you're already in an area where it's tough to pay for things, it wasn't your top priority to say, let's go buy a brand new house, right? And you can see that here. 250 to 500 decrease, 150 to 250 decrease, 100 to 150 decrease. All of the sales that are not happening are likely those cheaper homes. Average prices that are being increased are honestly being skewed by the houses that are in that $1 million range. I've said something like this before in a few of our other updates because I've been seeing it, but this past month, this study with Beryl, everything points to it being absolutely true, especially with the most extreme case being Harvey, highlighting this exact thing. So, what does it all mean? Do not take what you see here at face value that prices are being pushed up for no reason. Don't take it at face value that people are flooding out of Houston and the people that are coming in are a bunch of rich investors pushing up our prices. Because the reality of it is that this is something that already has been happening at a very small scale, and every single time we have a major event, whether it be a hurricane forcing moves to happen quicker, whether it be in the future interest rates dropping down a little bit more, whether it be the election changing how people think and how confident consumers feel about making a decision to move, it's just going to highlight that there are going to be less sales because the people within these price ranges probably won't be able to move as quickly, but it's going to be higher prices because the people with the means, the equity, the assets, the funds, the job security to make the moves will take advantage of buying those houses in higher price points that they perceive as much better deals than they were back at the peak of 2023. So for you, if you've got the means to move, don't let these numbers like the lower property sales year over year or the higher inventory and houses sitting on the market, don't let those deter you from buying houses. Buying houses or moving in general still happens in times like this. And in these more secure and stable price ranges that are a bit higher, it's very evident that you still have quite a bit of demand and activity in those ranges. Now, if you are in kind of those lower ranges or you're still looking to build up what you need to move, you guys are in luck because we actually toured a few houses inside the city of Houston that are at amazing deals here.